Hello, everyone. The stock of Datavault AI Inc., trading under the ticker DVLT, closed the most recent session at $1.70, marking a sharp and concerning move to the downside. By the end of regular trading on December 5th, the share price had fallen 16 cents, translating into a steep 8.6% single-day decline. The price ended the session near the absolute low of the day, which is typically a signal that sellers were dominant from open to close, leaving very little room for bullish recovery during regular hours. Even though the after-hours market has shown a minuscule uptick, nudging the price to 1.71, just 1 cent higher, the broader picture remains overwhelmingly bearish. The most important takeaway from this price action is not the after-hours rebound, but rather the fact that the stock suffered nearly a 9% collapse in market value in one session. Such a drop forces the market to reassess short-term expectations and raises questions about the sustainability of the company's rapid transformation narrative. What makes this decline particularly telling is the way the stock is behaving around psychological support. The session low, exactly $1.70, shows that buyers only appeared precisely at the round number, which often acts as a psychological floor. When a stock begins clinging to these round number supports, it indicates fragility. Once such levels fail, momentum traders often accelerate downward pressure. The gap between DVLT's current price and its 52-week high tells an even deeper story. Not long ago, the stock traded above $4.10. Compared to today's price, that represents a dramatic erosion of shareholder wealth. The company is still well above its 52-week low of 0.25, but the wider trading range highlights extreme volatility. Volatility that reflects a company undergoing one of the most radical strategic pivots in its sector. And that pivot is at the center of the DVLT narrative. Retail investors rushed into Datavault AI throughout 2025, largely because of the company's shift from being a traditional hardware brand into what is now marketed as a cutting-edge AI-powered data monetization and real-world asset tokenization platform. Many believed they were buying into a rare, ground-floor opportunity in two of the hottest technological supercycles: artificial intelligence and blockchain-based asset tokenization. This excitement painted DVLT as a future powerhouse, a company capable of turning fragmented data into high-value digital assets, and one that could supposedly generate hundreds of millions in revenue within a few years. The story being told to investors is one of exponential growth and industry disruption. But the price drop of 8.6% reflects a painful truth. The market is becoming less interested in promises and more focused on measurable progress. DVLT currently generates roughly $2.9 million in quarterly revenue. Against this, the company projects nearly $200 million in revenue by 2026. The divide between where the company stands today and where it claims it will be in just 2 years is enormous. Such a massive gap naturally invites skepticism. Skepticism that fills the space whenever execution does not match expectations. And right now, that skepticism is building. This wasn't just a simple sell-off. The decline appears to be driven by multiple overlapping forces. Breakdown of technical support levels. DVLT fell below the $1.80 support range, triggering sell signals for algorithmic and technical traders. A staircase-down trading pattern. Each small bounce was immediately sold into. This indicates heavy supply, likely from large holders, overpowering any buying attempts. Volume and price correlation. Sharp declines on strong volume often point to institutional exits, not retail panic. Market digestion of Q3 earnings. Despite boasting 148% revenue growth year over year, the absolute revenue numbers remain far too small to justify the company's earlier valuation of nearly $500 million. The sharp disconnect between valuation and revenue gives traders an incentive to short the stock or exit long positions, especially when momentum turns negative. It's important to remember that Datavault AI wasn't always an AI or blockchain company. Until 2025, it operated as Wisetech, a business focused on wireless audio technology. The pivot to AI was swift and dramatic. Such sudden transformations are not unheard of in small-cap markets, but they are often treated with suspicion. Large investors have seen countless failing companies attempt rebranding efforts using trendy buzzwords, crypto, blockchain, metaverse, and now AI, to attract short-term hype. This is why many market participants are now demanding tangible proof rather than flashy announcements. The sharp pullback toward $1.70 signals that the initial excitement from the rebranding has faded. Now, the company must prove it can actually secure meaningful contracts, scale its technology, and convert deals into recurring revenue. One of the most unique dynamics surrounding DVLT is the open conflict between the company and short sellers. Datavault AI is not just being shorted. It is actively suing a known short seller, Wolfpack Research, for alleged defamation. Such legal action is highly unusual. Most companies ignore short seller reports entirely. This lawsuit transformed DVLT from a speculative tech stock into a battleground ticker. Short sellers argue that the company's pivot to AI and tokenization is mostly promotional. Its revenue guidance is unrealistic. DVLT will need to raise additional capital, diluting shareholders. Its valuation is unsustainable, given current financials. Whether these claims are accurate or exaggerated, the conflict itself fuels volatility. Meanwhile, short interest numbers are extremely high. Off-exchange short volume often hits 48% or more. Borrow fees fluctuate unpredictably. Liquidity is tightening in certain trading venues. These indicators show that a significant portion of the market is betting against the stock. If borrow fees spike and shares become harder to locate, a short squeeze becomes possible. But without a catalyst, high short interest usually suppresses upward momentum aggressively. DVLT has seen noticeable spikes in fail-to-deliver and FTD data throughout November. FTDs often appear when shares are heavily shorted, liquidity dries up, settlement demand outpaces supply. Many retail traders interpret FTD spikes as direct evidence of manipulation. While they may indicate aggressive shorting, they're not proof of illegal activity. The more reliable squeeze indicator remains the borrow fee rate. If borrowing DVLT shares suddenly costs 20%, 50%, or even 100%, then short sellers may be forced to cover earlier than planned. That would create upward volatility. For now, though, shorts appear in control. DVLT claims to be building a platform centered on real-world asset RWA tokenization. This means converting real-world items, real estate, commodities, luxury goods, environmental credits, or corporate datasets into digital, tradable blockchain assets. Recent announcements include tokenization partnerships with the World Boxing Council, geothermal energy-related deals with Triton, AI-powered tools for valuing and scoring data assets. In theory, this business model sits at the intersection of two massive future industries: blockchain-based finance and AI-driven data monetization. If Datavault becomes a leading platform for tokenizing physical assets, its revenue potential could be extraordinary. That is the optimistic scenario keeping many long-term bulls invested. However, heavy execution risk exists. The company is essentially rebuilding itself from scratch. It needs specialized talent and infrastructure. It must navigate compliance in multiple jurisdictions. Its future revenue projections rely heavily on a few large deals rather than diversified income streams. That level of dependence can create huge swings in valuation. When you combine the enormous gap between current and projected revenue, the rapid pivot from hardware to AI, short seller pressure, investor skepticism, corporate rebranding history, heavy volatility, technical breakdowns in the chart, it becomes clear why the stock has slipped to 1.70 and why downward pressure continues to mount. The market is no longer pricing in hope, it's pricing in risk. Until Datavault AI demonstrates clear, measurable progress, quarter after quarter, the stock will continue to oscillate between sharp rallies and violent declines. Investors are no longer paying for promises about 2026. They are paying for execution in 2025. This is not financial advice.